We're going to talk about Tesla, and wow, with Twitter making some power moves here, the other side of that coin is Tesla, but that's not why we're looking at it this morning. It's about key price levels. So when we're talking about trades we want to analyze, we want to get something which gives you a little bit of a juice. And that 700 level, wow, we always go to a higher time frame here, and I'm talking about this 700 for the last couple of days. Now, I know we had the long in the afternoon show, some scalp trades a couple of days ago off of this 700. It was fantastic if you look at that on Friday. And then we came in, the top end was 735 on Monday, and we're just looking for shorts off that. Did miss a short at the open while looking at some other names, and it didn't quite get to 700, but you do see strong bounce off this 703 area that did retrace back into 725. So that was that line in the sand. And the strategy that's worked for me at the open has been not to be focused on necessarily having a biased direction on Tesla, but when I've got that line in sand level, allow it to open up, test that level, it picks a direction. I'm going to try and take some tight stop trades into that level in the direction that it picks. So initially, we have this attempt to spike back up above 700. We put in a wick high. The second I see that wick high at the open, I'm thinking reestablish 700 down. I'm looking for the short trade. The mistake that got made here was I did take some out at that pre-market low thinking, hey, it's going to be some whipsaw action. If I like this direction, there should be chances in that melee to get back into it. But I didn't take any more out at that 690 area. Knowing that 680 to 685 was definitely going to be another target zone, I should have been a little quicker to get out. And that's going to be the downside of trading multiple symbols at once. Now, for trends, I do want to be in the entire way. Once it does try to get above 700, puts in a lower high briefly, comes back in, I tight stop, jump back into the short side of the trade. And then the second I was in this second short, the first thing that popped into my head was, there's a wick bottom here. So once I saw that wick bottom through the low of the day, I asked myself, if I'm short something and there's a key price level and it puts a wick top, and then reclaims that key price level, I'm shorting it 10 times out of 10. So on the long side, why am I going to sit in this short when we have a wick bottom through that low and we reclaim 700? That is a get out of your short, start hunting for long positions. As long as we're holding that support area, it's all about that wick bottom from there in on out. Sometimes you've got to be willing to be flexible, especially in that opening rush. You get married to a direction, market doesn't care. You've got to be able to see these liquidity type events for what they are. That is a high volume low, holding the bid now above a key price of support. When that happens, usually you're going to find longs. I got out, immediately reversed into a long. We're scalping it into that 710 range. We're reloading it when we get back into 700. And then the usual thing happens. The last time it was 700 to 710, I did pretty much the same thing, which was get out at 710 once we hit the end of that opening rush. A lot of times, this pays off pretty well because you get some pullback and consolidation to start playing dips, and I don't want to take a breakout at that time. Of course, that's exactly when the breakout works, and once it happens and we get to that 720, I am thinking about, okay, get us back to that 710 area. If that can hold, I'll take a long trade in there. I was able to catch a dip into 710. It was incredibly weak in that price range. It bounced off that level after a huge candle and made no recovery and was all kinds of sellers at 712. So I just got out of that trade, noting the weakness, and said either I get a chance to play off of my 700 level, the VWAP didn't really consolidate enough for me, so we did have to walk away from it. But the key thing here is there's two ways this could have played out. Three ways really. I could have simply just lost on the short, been stubborn about it. I could have profited on the short, gotten out for a tight stop, and been flat on Tesla. Or I could acknowledge that we had a second setup show up. That was that wick bottom on Tesla, giving me the reason to reverse off of 700 to the long side of the trade. You've got to be willing to just trade the setups that are there, regardless of what your opening bias might be. Things change. You've got to take advantage of what the market gives you. And today, Tesla gave you that long off 700.